Hi, my name is Tatiana Glebkivska and I'm a member of Client Accounting Services team at Macpage. At Macpage we provide full accounting and business consulting services. And my team concentrates on providing accounting, outsourcing and controllership services to clients. Today I would like to talk about percentage completion method. Also I hear a lot from construction guys, work in progress calculation or WIP. So why is it important? Usually percentage completion method arises in construction companies that are on accrual basis. And the reason for that is that in accrual accounting, revenue can be recorded when the services or goods are completed or received, and the payment can be estimated, or sometimes they call it realized. In construction companies, the question is a little bit different. Let's say you have a 10 million project with a town to build a bridge, and in that project the town will pay you quarterly $250,000, regardless how you perform your job. So the question is, let's say you started your job and then the weather was terrible. 6 months went by, the crew managed to be on the job only for 2 weeks. However, the city already paid you $500,000. Which part of it can be recorded? Because, as we already discussed, in accrual accounting, revenue can be recorded when the services are completed. So how do we figure out which part of this $500,000 was completed? So here is the percentage of completion method comes, and this method is very easy. What you do is you calculate your actual cost, and that's usually known, and you know your estimated cost, because when you were bidding for the project, your engineers calculated how much it's going to cost. So let's say in our example, for 10 million bridge, we estimate 5 million in expenses. And now for the first 6 months, you incurred 100,000 in costs, but you received 500,000. Percentage of completion method, what it does, you divide the actual cost by total estimated cost. So in this situation, we have 100,000 costs divided by 5 million total cost, which gives us 2%. So this means that 2% of job is completed. Then we multiply this 2% by the total revenue, which is 10 million. And what do we get? We get $200,000. It means out of this $500,000, the revenue that can and must be recorded is only $200,000. The rest, $300,000, is a liability, meaning we owe to perform that services to the client. The situation can be the opposite. Let's say the weather was fantastic and we performed the services of $400,000. In this case, I believe 400,000 divided by 5 million gives us 8%. So 8% times 10 million estimated revenue, we should recognize 800,000 revenue, but we only received 500,000. So why this is important? This can either make or break your financial statements, your income statement especially, because your revenue will be either overstated or understated if it's not properly calculated. What I want to stress out and say that when you talk to your accountant and you see those work-in-progress calculation spreadsheets, they look gigantic and scary, and they have a lot of logical functions like if and then, and you look in there, you're like, what is it? But in reality, after all that if and then is done, all it does is you divide your actual revenue by actual cost by estimated cost. That gives you the percentage completed. Then, by knowing that percentage, you arrive to your revenue. That's all it does in the simple terms. So there is no need to be scared for it. However, it's important somebody who's competent prepares those for you, because the investors look at your revenue and they want to know how it was calculated. And then based on it, you can either get your financing or you can get denied. Another thing is, for tax purposes, people use work-in-progress calculation as well, and it is important to have your revenue properly stated, so then you have a good income, and then based on it you can pay your taxes or obtain financing.